Okay, good morning, guys. This is Simon with Trade and Perform Coaching. It is Thursday, the 12th of August, and it's dog days of August. Past performance not indicative of future results. This is for educational purposes only. And, basically control your risk. You can lose your backside trading futures. Everyone knows that. And let's get started. Okay, so I wanted to show you all first something from yesterday's trade. So number one, thing both on ES and NQ, like when you look at these charts for right now, right, while we are in balance, right? So that's all. I'm going to switch this to US session only. I'm going to put up 10 days. Okay, those two green lines, those are initial, that's the initial IB from the first 10 minutes, right? It's what I prefer to use. People use IB from the 10 minutes, the half hour, and the first hour, right? And then obviously IB high from first hour is important too because it tends to get broken one side or the other. But what you'll notice consistently in the last couple of days, right? So see this is slow summer grind, right? So where have all the best trades come from, right? Underneath IB high, right? Above IB high as well, above IB high, below IB high. All right, you get in the next day. Where do the best trades come from? Not inside, but above. Even when they pushed back in, it made sense to attempt to take it the other direction. You'll see over here, it pushes underneath, comes back, and then it kind of gives you a direction of which way it's going. What you really want is each time it breaks IB is to do a backside test of this. It'll usually, if you look at it visually, it'll usually go, if it makes an impulse move underneath. So let me define, hey Dietrich, good morning. Let me define impulse move. What I would define as an impulse move is if I can get, in the art world, the concept of negative space, right? So as long as I have negative space between that line, I would consider that an impulse move, right? Negative space underneath. And then what tends to happen is it comes back in, it rejects back down. Same thing over here. It gets underneath, pushes back in, rejects back down. You don't know exactly from where, but that's where you start looking for the setup. And then the same thing over here. You get negative space. Notice if you're going to short, even if you're going to short, right? If you're going to short, you get above IB high for push back in, and then you're looking to cover because we're trending so much or finding responsive buyers so much that once you get above the IB, you're looking to push out, and once you get underneath IB, you're looking to push down. So that's ES. You can also tell really quickly, ES has been very muted, right? Very, very muted. Let me show you what I mean by that because it's important that you keep it in mind when you're setting up your thought process. Like if you go back, let's just do 60 days. It shouldn't take too long to load. Right, so these are simple, easy tells to go, hey, how do I keep from over trading? Or how do I keep from getting chopped up, right? So inside IB, until you break one way or the other, tends to suck. It tends to be choppy. It's an easy place to rack up stops. As a matter of fact, I can tell you almost all my stops have come when I've tried to make something work inside of IB, right? So if you look back, and let's say we go back here. So see how we had more volatility here? Where if you're looking, right, breaks of IB, so you can see even if you were trading here, right, break underneath the IB, snap back to IB, get above the IB, snap back to the IB, above the IB, push back to the IB, above the IB, push back to the IB, and then out from there. And what it tends to do is the side that it breaks on, if it's going to trend, that's the side it'll trend to. So the rule of thumb in a bull market is underneath, you're going to find responsive buyers for pushes back in. And then on top, obviously, the short in this current environment is the riskier short. Hey, Victor, good morning. Let's see if I got everyone. Victor, Dietrich. I think I got everyone. Brenda, Rich. Anyways, everyone, good morning. So you'll see that pattern repeat over and over again. It's an insta visual that you don't have to even have a chart for besides the first 10 minutes to go, oh, which way are we going to tend to trade? Wow, that was easy for me to say, right? And you can see the patterns repeating over and over, right? Negative space below the IB, backside test in, push back down. Negative space above, either trend up or backside test for a push back out, right? But either way, trading within here prior to a break one way or the other is very difficult. So this gives you an instant, quote, edge of where the edge may be located, right? So for me, the hardest part of this discipline is just getting through these months where we're just grinding most of the day inside of that balance area, right? And you got to remember what's gonna drive this. First of all, it's been a very herd mentality. A great place to look at this is in the altcoins, right? Everyone had to have it from, I guess, 55 to 65. They couldn't stop pumping the thing, right? Then it turned. It all goes straight down, right? The bounces get shallower and shallower until nobody wanted it, right? They finally drove it down to 28, I want to say, on Bitcoin and 18 on Ethereum. And then it flips. It's all back in, right? So that mentality where we've gone from 18 to 35 on Bitcoin in a week, right? So that's creating two things. First of all, people are nervous to be short in general, right? Like, think about if it's affecting you to be short, it's affecting me to be short too. And certainly it's affecting people who are institutional traders, right? Because damn, when it starts ripping in one direction, it's very, very hard, right? Yeah, I want to say that again. When it starts ripping in one direction, it becomes very, very hard, right? And the downside is so enticing for this reason exactly. Look at 616, right? Look how nicely it rolls down. But really, once you got, I'm going to say this is 4 or 5 standard deviations out, you start getting the response of buying back up. See that? And eventually, it's going to make an attempt to push back towards that IB, right? So we'll know, right? This is chop, 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 break of IB, no backside test, right? And then we would be looking for the setup long. And if you look up at the setup long there, even if you had it and you waited patiently, right, what you're looking for, the way you know that we're probably going to have some type of reversal is you get above the wave to the low. So this is your first opportunity. I would count this the wave to the low. So I'm showing you what it looks like when there's range. I believe they're measuring from right here. That's the wave to the low. Okay. See, once we get above, generally speaking, they're finding ways to reverse back up, right? Notice this is my last speed bar to the downside. Once I get above that speed bar, that was my last trap seller, right? Speed bars over here are getting jammed, right? Speed bar down, triangle up, right? So see how there's no speed bar over here, but once you get to the right side, right, if you get that speed bar down, triangle up, it's going to jam people almost every time, right? When you look over here, see how that's constantly becoming support? And then when you look all the way over, right, see how they try to make it push to a new low and they missed by a tick? But this would start that process over again, this downside process over again. And now this would become, because so many hours have passed, while this never broke, this again becomes your push to the low from this series over here. So I'm going back to remind everyone what it looks like when we have a nasty down day. It comes back and makes a retest, right? If you'll notice, when we get over here, this right here becomes, see yellow, blue, speed bar near the low, that becomes a critical pivot point. See the first time over? I'm going to highlight that. First time over failed. You might have taken a stop, right? But second time over, beautiful. When you get over here and they retest the low and you got over the wave to the low, see how you get speed bar down, triangle up, speed bar down, triangle up. Those start to lift, particularly if you can identify a head and shoulders or a right side, left side. Additionally, one of the things I was working yesterday, hey, Kevin, good morning. Good to see you, buddy. Glad to have you here. Additionally, see over here how he established a bearish head and shoulders here? I'm always looking for this. Okay? See how they can't get over on the right side of the shoulder? Right? That's a really important. So someone asked me yesterday, David actually asked me, he said, Simon, I'm concerned about being in the room because I'll become reliant on the algos, and what if you disappear or die or decide to stop doing this, whatever, right? And I go, that's a valid concern, right? It is a valid concern because luckily Bill has all the algos should anything happen to me, right? And I guess I need to give him a way of getting in contact with everybody if needed, right? And my wife certainly has access to everything. But the whole point is a lot of the structure, a lot of the decision-making actually goes off of larger structure decisions. So see, this is a bearish head and shoulders for continuation at the low, right? So what happens when it gets above? So see where the optimal place to short this is if it can't establish above. See this, can't establish, established above on the right side. And now you can see how that behavior got affected from that right side. See that? And this is, remember, we're day traders. Maybe it fails off to the right, but it paid you monstrously here and here. They were good trades, right? So now going back to yesterday, I want to show you the NQ trade that I was taking. Reset this so we're not sucking down memory. So what have we reminded ourselves of this morning? First of all, the best trades come outside of IB, right? The best trades come outside of IB. As a matter of fact, so in speaking with Kyle, who I'm working with to automate and improve some of the algos, right? One of the things he mentioned that really just kind of, no one mentioned it to me before, and he goes, that essentially sets your own zones between the Wyckoff waves and the IB. It kind of sets your own zone for, instead of having to do the charting every day. He does no charting. He does it all off the waves and off IB, right? So most people hate Wyckoff because it takes a while to learn it, right? And then one wave matters and another wave doesn't matter, which is why I've really narrowed it down to very specific setups in there, because you're right, it is anyone who looks at Wyckoff initially, it is overwhelming when you look at it, right? So the IB sets the tone. So if you look at yesterday, on NQ, two things occurred over here. So this is where here's where I was attempting to get the short, was right over here. Right, so number one, why was I interested in shorting? First of all, biggest down wave was right off the top. That's usually a bearish signal, right? In order to make that work, I was going to have to get underneath the wave to the high, right? From a very technical standpoint, and you'll see that they just didn't do that overnight. That's the wave down there. And I don't think they ever got an orthodox close underneath that wave all the way till maybe now. Not even now have we gotten an orthodox. So this is the wave to the high. I don't think it was broken. Still no orthodox close above. They tried, right? See how they came out and took everyone's stop right there and rolled back down? So in order for this to roll, it was going to have to go lower. That was clue number one. Clue number two, the algo fired yesterday. Fired right over here. Right? So remember, I just kind of... That's where the algo... Here, we'll change the color since I'm using it. We'll make it... There we go. That's where the algo fired yesterday, right? So if I look at this, so what would have been ideal? I wasn't here. I don't know what I was doing at 12 o'clock. Oh, I was sleeping. Sorry, I had passed out. I was exhausted. This is the initial entry. This is the orthodox. Let's see if we get the orthodox close underneath. So this bar is completely not touching that line, right? So this is the orthodox close underneath. So had I been Johnny on the spot, this would have been 1/3, 2/3, and paid, right? But then you got to remember that becomes resistance all the way through here, and I clearly have a head and shoulders. And so what attracted me to that is when I look back to the left, there's a very extended, long left shoulder, right? So it had to be this here on the head and shoulders. It had to be this. And then this had to be, we'll make it a different color so you can see this. So that's the left shoulder, right? So clear hit above, impulse move below, backside test, test the critical location. This is first backside test, second backside test. Each one is each backside test gets subsequently more risky to take, right? So, but nonetheless, this is still the optimal location. Why is this the optimal location? Because it's the left shoulder. If they can't get the orthodox close above, you're likely to fail. So you will notice that I had shorted this very late in the day. I think I shorted it right here. And my target, so I think I had 12 points of risk. I think I was shorted 16 or 17, and I was trying to get 5 as my scale. and I couldn't get it there. You'll see I just missed several times, right? Okay, so that brings up another very important point, okay? I see people going when they're trading. So I stopped this flat because we finally got right to the end of the day, and I just couldn't get the scale. And I know at the end of the day, if I'm short, someone else has to be short. They couldn't get any push, and they just covered into the close. I covered this flat, right? So people will ask me, they're like, well, you could have gotten 7 points. That's still $140 a contract, right? So every time you want to do that, go write that down, right? Because we have a very difficult problem to solve. It sounds very easy, but it's a very difficult problem, right? We do not like to lose by nature. Anyone who's in this business is somewhat competitive. We've all worked hard. Wherever you are on the scale, you worked hard to get there, right? You spent money to be in the room. You spent money on other education. You spent your own capital trying to learn, right? So the natural expectation that I see when I'm coaching people is the desire for perfection, right? And that's killer in trading. That is just a killer in trading. If you don't constantly aim to get at least a 1-to-1 RR on your trades, right? Even when it's slow. So yes, you could have I walked away and said, hi, I was profitable and could have posted a profitable day in the room. Absolutely. I could have right here. I was up $500 for the day. I think I ended up the day down $200 with commissions. I think, right? I could have said I was out. I made $500. I'm the hero, right? I'm the champion. But that's not my objective, right? My objective is long-term survival. And anyone who's been in the room when we were just doing the levels will know, right? It was always this guess which level is going to push us further and guess which one's not going to push us further, right? So the zones would work, but it'd always be 2 point scale, and then our RR was inverted. And if you constantly took the 2 points, you just constantly went through this cycle of boom, not boom bust, but break even, flat, up, flat, up, flat. You had to get the extensions, right? Which is how this whole, let's go on a journey to figure out what it looks like. What are the tells? And what you're seeing on the screen. So I learned to trade just on the dome. I didn't have charts. I just would watch the dome where price would respond, right? So really all the algos that you're seeing on the screen are a translation of what I see in my head effectively, right? Which I could see from just looking at the dome that I couldn't get other people to see while I was coaching them. That's how this whole thing kind of evolved. The message was, you don't know what you know, Simon. That was a consistent message that I would get from people, right? So going back to my point, it is very desirable to come back over here and go, oh, I could have been perfect. So I do two things. Number one, was I right? I was right, but I was wrong because they squeezed them right into the close. But this was the move I was looking for, right? From 16, it eventually stretched all the way down to 82, right? So from a risk-reward standpoint, I risked 12, right? From 16 to 82 is 18, 28, 30-something, right? So this is worth $600 a contract versus my risk of $240 a contract if I could have gotten them to roll over, right? Secondly, I was patient. Not only did I have the desire to close the trade out here, I also had the desire to stop the trade over here because I was so certain they were going to stop me right in here, right? I'm like, they're banging up, and I want to hit that mouse. Long term, right? What you should be pushing yourself towards is what is the pattern that pays me the most and what's the environment? So problem number one, if you're trading ES can't get out of its own way. Yes, when you look at the end of the day, like the trick thing here is like if you look at ES and you look at the end of the day, you go like, oh, well, it was totally tradable, right? Like the high was 42, the low was 28, right? Like certainly there was money to be made there. But the problem is confirmation, right? So in order to capture the maximum reward, you had to short 44, 42, and you had to cover 44, 30 to capture that 12 points. But the reality was, A, you had to get underneath. This is the point at which you had to get underneath to go lower, in my opinion, without looking whether the algo was there as well. That's what you had to get underneath, right? So now you had to make a decision. By the time you got underneath an orthodox close, this was your entry right here, 44.34. And the max you could have gotten in that was from 44.34 to 44.30, assuming that you knew to cover exactly at 44.30, right? Next, what do we want? We want a backside test, right? That's what I would prefer. Did the backside test work? Hell yeah, it did. It did work, right? But if you shorted 44.37 and a quarter, the max you got out of that was 44.34 and three quarters, right? So your brain's going to constantly play tricks because what our brain naturally does is go, boom, look at that. It went from here to here. Okay, so the next challenge, which I've been trying to do forever, is figure out, well, how the hell do I just nail it right here on the edge, right? But the reality is there's no head and shoulders there. There's no fat rotations in the entire rotation. So what this tells me is in ES, in order for me to make a lot of money in ES, I need 10 and 20-point rotations, really 20-point rotations intra-day or at least on a 24-hour basis. So I have enough to get underneath, right? I have enough vibrant PA to come back and backside test and then get it to go to the downside. What I see in August is people going, I should have been short 44.42 for 44.30 and I should have been long 44.30 for 44.42. There's a way to do that, right? It's called use fib levels and use retraces. That works really fine in a narrow, confined market, but you're going to have to be able to have the mental ability to switch off of that. And here's the deal. Everything works sometimes, right? Everything works sometimes. So what am I in the hunt for is something that's dynamic and consistent and adjusts to all markets. I don't want to be the one that I have to mentally adjust to every single range. That's the whole point of getting the algos done. So this for me is mostly garbage because I don't want to be Mr. Panic Man on every trade. I want to let my trades extend 1-to-1 RR. Now, here's the other part, right, that I want to express that's important. So NQ still has enough range where you can get paid. I don't think ES does right now. It will soon, but it doesn't right now. So here's the deal. Be gentle with yourself right now, right? Get your risk off. And then my suggestion is if you can, right, emotionally, if you can, extend your trades out, right, on your trailer. And don't beat yourself up right now because it's just too damn hard when there's not enough participation, right? My suggestion is if you're going to speculate on a turn, the easiest place to speculate on a turn is outside of IB, right? Outside of IB and at preferably with location, but at least you've gotten a wave that shows that it can be, hey, we're underneath, we've stopped out a seller, we've stopped out a buyer, we're at a key level, the algo fires. You notice if that algo fires, if it fires near the low, that's the absolute best. Let me erase this real quick. And then if you can identify a clear head and shoulders, life gets easier to figure out where the extension is coming from because on that right side, when you get on the right side of a trade, that's where the bigger extension comes from. And this morning, by the way, the extension was 15.020. That was the bull bear line, right? This is the orthodox close underneath. It didn't make it back for the backside test. It was right here. So I would have attempted to do 19 and a quarter minus two more ticks would have been 1875, and I wouldn't have gotten filled, right? That's a place where if I took 1/3 here and 2/3 here, I would have gotten paid. I just didn't do it, didn't want to do it, and I'm all right with that, right? And not to mention that it was 7:43 in the morning, but that's where it's set up. You get the backside test enough, and you'll notice for those who've been in the room lately, what you should have seen is ever since we have this last algo, that algo is freaking awesome. It took me a long time to figure out how to tweak that to make it work because it was actually an old algo that I was like, oh, I didn't see that kind of deal, right? And then lastly, narrow your focus, right? So head and shoulders for a pattern works fantastic, right? In general, getting above a stopped out seller or stopped out buyer tells you that we're going to push higher. The biggest wave off the high or the biggest wave off the low generally sets the tone for which direction we're going to go. Like that's a dominant wave down. You would expect some follow through on that, right? We're underneath the wave to the high. That's right over here, right? See how it came back and tested it? Also, the rule is first orthodox close is okay. It'll generally backside test. Second orthodox close underneath the wave to the high will tend to get you some kind of extension to the downside. Now we have to merge that idea with where's the first 10 minutes IB, right? Because the easiest trades have come above and below that IB. So what happens is the easiest way to get that done is to go, I want to get outside of IB. I want to find a exhaustive wave down or get above my or get a dominant wave up and start working against my sellers. And I want to see on the bottom, I want to see these yellow speed bars kick out or indications that they're pushing to the downside with the algos and trapping themselves. And at the top, I want to see the opposite, right? So just like when you look over here, see how when we came up, even if you didn't have the rest of the data, right? There's so many multiple ways to pick this off. See this? This right here tells you someone pushed really hard right there, right, to get this extension. Those two speed bars right there are really powerful. So see when they came back against them, they can't even get above them, even a tick, right? 1508, so it's 98 to 0875. You need an orthodox close above that, meaning no part of the bar that closes above is in contact with this to invalidate this area, right? And that's repeating over and over again. So here's my suggestion to everyone, right? Don't get stops in the first half hour. All my bad stops have been in the first half hour, and I've had to dig out of holes on some days. Yesterday was an example of where I put myself back, I think, in the first half hour, and I never got out of it, right? Let that first half hour pass. Let it get outside of IB to a level where either we set up intraday or we get to a support level on the from the ES and NQ chart levels. Like, for example, 14,927 to 14,903. I'm going to work really hard in here to find a way to get long, right? I'm looking for clues because I know that's a key area. It would be, at this point, outside of IB, hopefully, once we just long liquidate, right? And then come with the mindset that, hey, it's August, right? Let's see if they give me the opportunity to make the money. But if they don't give me the opportunity to make the money, I'm not going to dig a hole this time of year, right? I'm not going to dig a hole this time of year. And make sure that your loss limit and your sizing, especially if you haven't been stacking on the P&L, that your loss limit and your sizing does not set you back to a point where in probably a month from now, the markets will be ranging better than they are right now. That would be typical of coming out of summertime, right? Let that be your guide and go, I want to make sure that I have capital available when the market gets good. And it's just not great right now. It's good enough to put down some P&L, and that's about it, right? And so that's what we're hunting. So I hope that helped. Everyone the feedback I'm getting in the room is that everyone is doing well, that they're slowing down. There's one person that I'm having to work with that's having a personal issue with just simply buying because it's too low or selling because it's too high. But that has nothing to do with the setups themselves, right? And, let the head and shoulders form. Let it form, and if we see it, we see it, and if we don't, we don't. And look for where they're setting up on the traps. On the bottom side, again, we're looking for things like getting underneath parallel speed bars, right? You can see even over here, see how this became a resistance area within here from yesterday? See how they couldn't get an orthodox close above? So now this is going to become the challenge. If we can get underneath this, now we have a chance of rolling down, that there's opportunity below. All right, so this is retesting yesterday's low, I want to say. It is. And so this was the move I was looking for from yesterday overall. And if you go, by the way, if we change this to just get rid of the evening session, so you can see what that looked like from continuation, this is where we were shorting, right? They squeezed this out right at the close, which is fine. But this is what I was expecting from that break-in off that right shoulder. This is what I was looking for, right? So again, we'll just keep setting up over and over till we finally get it right. Anyways, I'm sure there'll be some opportunity in here relatively soon today. So that 14,927 to 14,903 should find a response in there somewhere. That's actually a pretty big zone. It might be from the front and the back. And then watch for the trap back in at 14,962. This would sit off the left shoulder. And, of course, we haven't established IB yet. And Q is down 63. ES is down 5. And Russell is down 3. I don't have anything else to add for today. We'll just see if it goes. Again, ES, just not much rotation, right? You can see it there. Like, look how tiny that is. It's barely producing any bars. I almost want to drop it a tick, but I know that's a mistake. So So this is the last guy that jammed in. See that? So see how getting above him would form a head and shoulders? So he likely becomes support. Again, I'm not going to trade it in the first half hour because I don't like getting stopped in there. It frustrates me too much. You can see that, again, the trap underneath that 14.962. The likely targets back up are 14.998, 15.10 to 15.20. And I hope we get some kind of opportunity underneath here after the IB is established. And that's where I will go to work. I like not getting stopped. It's makes life easier. All right. By the way, NQ is one time into the downside on the day time frame. We haven't been able to break above a prior day's high in a few days now. Just a clue. It's not bearish still, obviously. And that's just retail buyers buying underneath 14.962, which is fine. That's probably going to be IB low. And there is nothing on the calendar unless someone has something. I have zero Fed speakers, zero anything. It's totally just ghost city. So that's a preview. I'll post